I tend to update that on a weekly basis. So what I'm going to do here is I'm going to look up a stock or two that I actually am buying right now that I actually do like right this minute. I know earlier we were talking about Visa, and Visa is one of those stocks. I know that I've mentioned Visa in what Dr. Boyce is buying at some point in the past. And also the other thing too is that there's another list that you can get access to as a member of Prime, which is Dr. Boyce Moneymakers. So the difference between Dr. Boyce Moneymakers and what Dr. Boyce is buying is that the Dr. Boyce Moneymakers are literally stocks where you can sell the calls on those stocks right now and get premium right now. You can get money income right now. Those are some of my favorites, but those tend to be the most volatile. Some of those stocks, I try to pick stocks that are also good long-term investments in case you decide you want to make income from that stock for a long period of time. Some of them are stocks that are not good long-term investments. They're more like one-night stands, if you think about it, in a relationship kind of context. So ultimately, that mix, I want you to make sure you know the difference. So just because I say that I'm selling options on a certain stock, that does not mean I'm saying that stock is a great investment. In fact, sometimes it could be a hot potato. Like, for example, we've talked about companies like Carvana. Carvana is the kind of company that I wouldn't necessarily want to own long-term, but Carvana is beautiful for selling call options because the premiums are unbelievable. So for example, if I look at Carvana right now, Carvana is $21 a share. So let's say you had 1,000 shares of Carvana for $21,000. A person could sell those calls right now for approximately, if you pick a strike price a little bit off the ball, let's say 22.50. The current price is 21.42. So let's say you picked a dollar off, which is a little more than 5% ROI. You can sell those calls right now for $1 a piece. So if you had 1,000 shares of Carvana, a $21,000 investment, you could sell 1,000 calls, get $1,000 a week off that one investment. That is amazing, right? I'm thinking about this. A $21,000 investment gives you the income, a $50,000 a year income. I've seen this. I've seen people make a $50,000 a year income off that one investment in that stock. Now it has to be managed. You got to buy your puts and protect your downside because Carvana is a crazy volatile stock. The thing about risk is that risk is something that isn't always inherent in an asset. It can be managed. It can be three ways to deal with risk are to either walk away from it, absorb it, or manage it. Now, with some investments, like an S&P 500 company, you want to just absorb it. If you have a diversified portfolio of S&P 500 stocks, the risk is not so unmanageable. Just waiting, being patient will make the risk go away. Some risks, you walk away from, like, for example, the risk of going down in the ocean in a little tiny submarine that might implode. That's too much risk. That's a risk you walk away from. Stock options, in my view, are the risk you manage. So what we talk about in class is a process where you pick the position, you buy the appropriate put options, you buy the insurance to protect your position so you don't lose all your money in the equity value, and then you just sit there and you just start collecting that income. Right. So right now with my position in Carvana, I'm able to make, a couple $1,000s a week without working just by selling the options on that particular stock. And Carvana is just one of many. And so if you log in at drboyceprime.com, drboyceprime.com, or you can just go to theblackbusinessschool.com. If you look under Dr. Boyce Moneymakers, that's where you will see all the stocks that I sell options on every single week. Like I said, Carvana is one of them. There's some others out there. And then if you look under what Dr. Boyce is buying, these are my medium and long-term investments. These are the stocks that I bought lots of shares in, especially when the market was down, because I felt like these companies were going to come up. Some of them are starting to wake up, and they're waking up in a more dramatic fashion than I thought. And so when you're doing this, when you're selling the calls every week or whatever, don't get so caught up in the income side of your investing strategy that you forget about the long-term wealth building side, right? So it's just, think about it like dating. I think dating is a great analogy. You have the time of your life where you're having fun. He looks good, she looks good, whatever it is, whoever you like. And you kind of just do what you want to do. But then you have the more serious side of your dating life. Okay, that's my wife. That's my husband. That's going to be my boyfriend, girlfriend, right? So investing is the same way. I have my highly crazy volatile stocks that are going to give me short-term income. And then I have my long-term investments, which are solid companies, the Microsofts and the Apples and stuff like that. I want as much of my wealth to be connected to the companies that are making money as I possibly can. Like, I want to be as closely connected to the money makers in this economy that I could possibly be, because that's where the money resides. That's how money gets made. And it's fascinating to me that so many people don't know this, but I get it. My PhD's in this stuff, so I guess I would know more than most people. But I'm telling you, it's a smart move to make. So if you log in at drboyceprime.com, you'll see all this stuff. Not only do you see the Dr. Boyce Moneymakers, you also see what Dr. Boyce is buying. You also find access to our Tuesday stock market trainings that we do every single week, and also our Prime meetings, as well as a bunch of other bonus materials. So make sure you take advantage of that, and feel free to bring your whole family in. And the goal of the Prime program is very simple. If you're not making more money than you invested to be in the program, then I don't want you here. I don't want your money, right? This is something that I know for a lot of you, it's changed your lives. I know a lot of you are doing much better income wise because we talk about these techniques. And the thing about it is, though, it has to be done in a certain way. And you have to really manage your fear and manage your greed. If you get scared or you get greedy, you're going to get burned. So you have to make sure you're managing the portfolio in the right way. And that's what we talk about in class. Okay, so another question that I see here, let me see here. My allergies are coming back a little bit, so sorry for that. Hold on. Give me a second. Let me see. Here we go. Okay, so another question I have here is from Sean. Sean says, Dr. Boyce, could you list the name of stocks you're currently writing calls on future positions on what Dr. Boyce is buying? So remember, what Dr. Boyce is buying, those are the long-term investments. But if you log in right now at drboyceprime.com, look under Dr. Boyce Moneymakers, and you'll see all the stocks that I'm selling options on right now. I don't update that every week because I don't change my positions every single week, but I do look for interesting investments every week. So a lot of times, if you are on the text message list, I will send you updates to my own portfolio, or opportunities that I see that emerge. Like a couple of opportunities emerged this week, and so I'll do that. But yeah, so if you want to see that list, just log in right now at drboyceprime.com and you'll find everything you need. Dakari says, what is the call strategy when your initial stock buy drops dramatically? When your initial stock buy drops dramatically, then what you can do is you can do roll downs, where you can just shift your position and sell calls again at a lower strike price. Also, remember that that's why you have cash in your portfolio, to protect yourself against those kinds of drops. So everything drops, then that's when you need your cash. Your cash is your cushion. So you don't ever want to invest to the point where you're dry. You need to remain liquid on some level. My liquidity measure is about 10% of my total investment value. So the total amount I put in my portfolio, I like to keep 10% of that in cash, for two reasons. One, to protect me in case the market goes down, or two, to help me get in position in case the market goes up. Because if the market goes way up, you're going to want to wiggle and make moves in order to be able to take advantage of some of those opportunities that might emerge. But most importantly, if the market goes down, the cash has the greatest impact, because number one, it protects you from a margin call. Number two, it gives you the cash flow you need to invest in some of those cheap assets. As you've seen in this market, I talked to my brother-in-law the other day, and he kind of shocked me. He told me about a stock that I had forgotten about, that I kind of put to the side, but I'm actually going to put back up on my list in terms of assets I'm going to play with. Virgin Galactic. Virgin Galactic was a stock that I had just kind of wrote off for dead. It's a special purpose acquisition company. I just kind of let it go. And right now you can sell those calls and really get a lot of money from that, right? So I took a small position in Virgin Galactic. The problem, though, is that some of these companies that generate the most income are the riskiest. So you got to be really careful with that. And also, if you log in and look under Dr. Boyce Moneymakers, there are some stocks in there that are not as risky. So you can take a look at those too. All investments, though, need protection. Some need more protection than others. Latanya says, okay, sorry, I answered Latanya's question. So generally what I would say is that when it comes to selling the calls, I adjust about once a week. Every Monday is when I sell my calls. When I say adjust once a week, I collect my income once a week, because I like for it to feel like a weekly paycheck. In terms of major adjustments in the portfolio, As I get extra cash, I'll take new positions. I try to make sure I'm diversified. I don't try to put all my eggs in one basket. If something's doing really well, that doesn't mean I'm going to pour everything into the one thing that's doing well, because again, that's greed. Greed will get you burned. And that's my 2 cents. All right. So let's see. Meredith says, great class tonight. This may be discussed in the future. What happens if you do not exercise your call option and time runs out? That's a great question. So if you have a call option that is in the money, let's say you buy the call. Let's talk about the buy side, because that's where you get to exercise. When you buy a call option, you are buying the right to exercise an option. So that means if the stock goes past the strike, you can then buy the stock at the strike price. Well, if you don't exercise that call option, then what happens is that the clearinghouse, your portfolio company, or whoever it is that's managing your portfolio, whatever app you're on, or whoever your broker is, they will go and they will try to sell that option, right? So let's say the strike price is 50, your stock hits 60. So you got $10 right there that you can make easily by buying at 50 and selling at 60. Right. So what if you just forget you got the option, you just forget that it's there and the strike price hits? Well, they're going to try to take that contract and sell it for you. So they're going to sell it for about what it's worth, which is about $10, and you'll get that money, it'll go in your account. If there's a liquid market, that's what's going to happen. Now, what if they cannot sell that option? Well, if they can't sell the option, then they'll put in a request to the clearinghouse scratch that. If they cannot sell it, they're going to go to your portfolio and they're going to exercise it for you. They're going to try to see if they can just exercise it for you, because that's money in your pocket. So they'll buy the stock at 50, sell it at 60. You'll get that $10, or better yet, you'll just buy that $50 stock and you'll just have the stock in your portfolio. Well, if they can't sell it and you don't have the money in your account, then they'll put in a request to the clearinghouse. I forgot what the request is called, but basically the request is like, look, this option expired in the money, but this person can't exercise it. And I think, actually, I'm not sure, but I believe that you have to be careful about that, because then they might just get rid of the contract, right? They might just destroy it, right? Because if there's no market for an asset, then you can't make money from that asset. Now, I got to go double check that just to be sure, but I believe that if you don't exercise and you don't have cash in your account and there is nobody willing to buy that contract, which isn't going to happen for any major stock, then you could actually lose that contract and lose all your money. So keep an eye on your options. Be really, really careful about that. Raphael says, good day, Dr. Watkins. My question is, do I have to buy 100 shares of the same, or can they be different in order to do stock options? If you want to sell call options, you have to buy 100 shares of the same stock. If you want to buy call options, you just have to buy 100 contracts. 100 contracts will not typically cost as much as 100 shares. Martha says, where can we find the list of stocks options you're buying, selling this week? Don't forget, if you log in at drboyceprime.com, drboyceprime.com will explain everything you have access to. 2 things you have access to are what Dr. Boyce is buying and Dr. Boyce Moneymakers. What Dr. Boyce is buying is updated approximately once every 1 to 2 weeks. It is a list of long-term investing stocks that I believe are going to make money for you. It's based on my research. I find these stocks for you. I put them in there. And also, of course, as member Prime, you can send me questions. I can research stocks for you. If you have a question about a stock or your own situation, I'll be happy to answer that. Just log in at drboyceprime.com. Leave me a question. The other group is Dr. Boyce Moneymakers. Those are stocks that I specifically use for one purpose. I use them to generate income. I'm not really thinking about the long-term investment prospects of these particular companies. So again, you could think of it like different types of horses. You have some horses that are race horses. You have some horses that might be quarter horses. Some horses you ride in the snow. Some horses you take on long journeys. Some horses you take on short trips, right? So, or sprinters in track and field. You've got sprinters that you got sprinters that run really fast. You've got long distance runners that run slow, but they have a lot of stamina, right? You have high jumpers, long jumpers, everything in between. Okay, so if you want to just take a look at either of those lists, just log in at drboyceprime.com. All right, Garrett May says, I know this as a participant of the program, we have access to the material for life. However, is it possible to download a copy of the PowerPoints that Dr. Watkins uses in each class? Yes, you can download the PowerPoints anytime you want. And also that training, if you haven't watched the training on my website, it's how to make money without working. That I made that free to the public for anybody that wants to kind of just understand the basics. So if you go to boycewatkins.com, it's right there. I think that's a good place to look in terms of seeing the potential of what this can actually do for you. Lamar Grant says, how long is the stock options income program? It is a mentorship program, which means it lasts for as long as you want to be a member. Most of you signed up for an annual membership. So when the year ends, if you want to renew, you can. If you don't want to renew, that's okay too. But ultimately, I update every single week. I update on a regular basis. I send you guys constant text messages and alerts and investing opportunities, things like that. So that will always be available for you as long as you're a member. All right, one more question. Rochelle Harper says, hello, Doc. Once you sold your covered call, do you just wait until it expires and then rinse and repeat? Typically, that's what I do actually a lot of times. Like, so for example, let's say that a stock is at 50 and I sell a call with a strike of 53. If that stock stays at 50, then I don't do anything. I just wait until the clock runs out. It's like a basketball game. You got the lead. You're just letting the clock run out. You don't have to change anything. You have to change your offense, change your defense. Because remember, with the option, you get your income. Your money is in the bank. It's yours. Now you're just waiting they bought something from you. What did they buy? Well, they bought hope from you. They bought a possibility from you that the stock price is going to go up. So you're just like, okay, well, we'll just, thank you for playing. We're just going to let the clock tick and we're going to wait until the clock strikes zero. And if you don't score points between now and then I'm going to keep your money, right? So, and either way, you keep the money. Either way, you keep the money regardless, right? So effectively, if the stock doesn't move much, then there's no reason for me to do much of anything. Now, here's what happens though if the stock moves. If the stock moves way down, then I maybe roll down. Right? I look at my cash position. I say, okay, do I have enough cash to cover a margin call? Do I have puts in place to protect me in case this freaking thing collapses? I don't want to get killed on the decline in equity value. And at that point, you're kind of managing the situation. Then what I might do is if I want the extra cash or if I feel the need to make an adjustment, I can do a roll down. So I can go in, renegotiate the deal. Basically what you're doing is you're buying back the old option. So you sold the other option for $2. Now it's only worth 50 cents because the stock price dropped. When the stock price drops, call option value drops. So now you're buying back this $2 option for 50 cents. But guess what? You can sell another option for $2. So you then make $2 minus 50 cents, which means you make another $1.50. So even though your equity value dropped, you're still getting compensated for your trouble. The problem, though, is that now that the stock has dropped from, say, 50 to 48, you're now dealing with a new game. You're playing a new game. You now have a new strike price. Let's say it's 50 now instead of 52. So if that stock reverses on you and then shoots back up, then you got another problem. You're going to end up having to either roll up or you may end up having to sell the shares. But remember, even if you so-called lose your stock, even if the stock goes past the strike, you're still good. You still made money. So just never get into the idea that you really lost because you didn't lose. If you do it the way we talk about in class, you're not going to lose. There's just varying levels of winning, right? If that stock goes up, you won. But greed will tempt you into believing that you lost because you're going to say, man, I only made $2 a share. I could have made $4. I only made $3,000. I could have made $5. If I make $3,000, that's $3,000 in my bank account. That means I did not lose any money. That means I have seen an increase in my income. I can always come back, buy that stock back later. If I don't want to buy at the current price, I can wait for the price to go down. Or if I want to, I can sell some put options and put myself in a position where I can take ownership if the price declines. There's a lot of different ways you can play that. Okay, so we'll talk about that more in class. And so I hope to see you guys in class soon. So by the way, if you want to get access to these recordings or any of the extra material, we have a ton of material for you guys, as well as the stocks I'm selling calls on for this week. Just log in at drboyceprime.com. Don't forget to log in because there's so much stuff in there for you. Everything that you need is in there. The stock options masterclass is in there. You've got access to the stock market investing program in there. You can bring your kids, bring your spouse. There's couples and families that participate that bring their family investment club in. And I'm totally fine with that. Like I really want you guys to look at this. James Wilson, one of our students, is a deacon at his church. He is now teaching this to the entire church. The entire church has formed an investment group and they have piled together their money and they're making tens of thousands, if not hundreds of thousands of dollars together using things that we do in class. And he asked me permission. He said, is it okay if I share this and teach this to my church? I said, yes. The goal is for you to teach as many people as possible. So in the Black Business School, we have to put price tags on things just so we can generate income. Every university needs an endowment. Every university needs its finances. Every university needs to have a budget. We have to raise money, but our goal isn't to scrape every nickel off the earth. Our goal is simply to have enough money to function so that we can put you in a position where you can go empower the people in your circle. So don't be afraid to form that family investment club. I'm meeting with my girls tonight on a Zoom, and we're going to have our family business meeting like we do every Sunday night, because what we do in that meeting is we talk about our businesses. We talk about our investments. We talk about what we're doing to get ahead financially. You must do that with your family, because if you don't, then, you're going to be stuck in the same little crappy purgatory that we've been in. And there's nothing saying that you have to live the way you were raised. You can actually make your life better. So that's my little piece of encouragement for you guys today. And I hope this conversation is helpful. So I'll see you guys in class, and I'll talk to you soon. Take care. Bye-bye. Don't forget, log in at drboyceprime.com if you want to take a look